Welcome traders, Patrick from Trading123.net. In this video we're going to show you the Trading123 Fibonacci Indicator and how it works trading the futures here. So basically you have various levels of the Fibonacci levels. You got the 100, the 23 to 38, the normal 50, 61, 78.6. And with ours, we have the daily open that we put in, and the daily low and the daily high. And then the daily fib is a major support line right here for the Fibonacci indicator. And so the trend is above. When the price is above this green line here, the trend is up. And same with the daily open. You will not find that in NinjaTrader Fibonacci's or anybody else's. And with this Fibonacci indicator, it automatically draws the fib levels for you. All you got to do is load up a chart and the fib levels are plotted for you throughout the day, and the fib levels move with the price action. So as the market is going higher or lower, the fib levels are going to adjust periodically to the current market conditions, where other fib levels don't do that. So looking at the ES here, when price loses a fib level, this ES right here would be a short at the 38.2, and then you target the next fib level, which would have been the 61 or the 78.6. So it sold off from 39.74, which was a 38.2 fib, down to 39.65. If you targeted that area, that would have gave you 8 to 9 points potential profits. And then if you hung on, if you had a runner down to this area, potential profits another couple points. Now the key reversal area is right here at 61.8. So this is your key reversal area. Price dips below, goes sideways, and then moves up through it. So this is the area where you'd go long. And then you target the next fib level. So 39.65 to 39.74, that's another 8 to 9 point potential profit. And even on one contract, 9 points is a nice profit. Two contracts, a really nice profit. So 9 points on two contracts would be like $900. And do the math on the one. And then the market right here during lunch is just going sideways. And you'd be done for the day. And this works on all futures, CL, NQ, ES, micros, what have you. And you can use it on any type of time frame. 2 minute, we like to use it on minute charts, or you can use it on Renko, any type of Renko chart, range charts, what have you. But the most important factor, the line in the sand here, is knowing the overall trend. And you get that by these two lines here, the daily open line and the daily fib line. Very powerful support levels that institutions use to stay long or short the market. And here's your NQ chart going right now live in the market. As you see, the market's going nowhere. It's a Monday afternoon during the summer. But here's your main support level of the fib. It loses, number one, here's how to read the market. The price is below the daily fib level. So this is the line in the sand for staying long or short. So this would have been a short right here at the 61.8. You target that fib level. So it sold off from 12.368 to 12.337. So you're looking at almost 30 points, and then it reversed, and you could either go long when it starts to break out here and use this fib here as a stop, And then your target, first target would be the 61.8, and then this green line in the sand here, the daily fib, or you could go long the 61.8, wait for it to get to the 61.8, and then target this level. And then as you see here, once it loses this level, the daily fib, the price is heading down towards the 61.8, but this is during lunchtime, so this would have been your big reversal play of the day where you would most potential profit. But what happens is price moves from one fib level to the next, and then down, and then up, and so forth. So these are giving you guidelines as to where the price action could go. So as you see here, the NQ is weak and is selling off, and it'll probably go down to this fib level where it was support before it makes up its mind whether to continue lower or reverse and go back up during the afternoon session. So that's the Trading123. See, we just sold off here and just hit that fib level. So a short, you came back from lunch after 1 o'clock looking at the market. What I'm saying here is, okay, price is coming up to this daily fib line and it's looking weak. So this would have been a short trade, and you target that fib level. See, it's pausing right there because all institutions use these levels, so they're taking their profits from the short up here and position trading. So most people say, well, my MACD is not telling me it's going to stop there. It still says it's going down. Or your other indicator, and look at that bounce. Came right to it. So as you see, price is trying to make up its mind which way to go, but it's a Monday afternoon during the summer. You wouldn't really be trading this chop, and you've already made your money for the day. The key thing with the Fibonacci levels is there's support and resistance levels that work throughout the day, and trading is all about support and resistance. Price moves from one level to the next, and that's how the market works. And when you can understand that, you'll understand that most of your lagging indicators, like a MACD, don't work. Support and resistance is the key. And as you see right here, it's holding up. So I often get emails from people, and well, why did the price action just stop right there on a dime? Well, it all has to do with support and resistance. And that's the Trading123 Fib Indicator, one of the best indicators out there for trading price action and knowing your support and resistance levels. So the price is still moving down. If you still had one runner going, you could still be short this. But that's up to you. If you made a couple $100 on this trade, that's all you need to do and be done for the day. But if the market is weak, the price will go down to this fib level here. If it reverses, it'll move up and then move up. So I hope you enjoyed the video. This is Patrick from Trading123. Be sure to subscribe to our YouTube channel here and like us on Facebook and Twitter, and we'll see you in the next video. See, price is still holding. The magic of the fibs. All right, thanks for watching.